Now, here in the UK, the tech sector has been warning that it risks falling behind, with many of its success stories increasingly choosing to list abroad. One company that's considering an IPO is the British buy now, pay later platform Zilch. Now, ahead of the summer election on July the 4th, I'm pleased to say I'm joined by the CEO and co-founder of Zilch, Philip Belamant. Philip, lovely to have you in the studio with me. It's interesting, you're working on making the UK a bigger hub for financial innovation. You're part of Innovate Finance's Unicorn Council. I wonder, whatever government we have next, whatever colour they are, what do they need to do to make it more attractive?
Well, what's interesting is, I think it's about now 5 weeks to the day, we are all going to discover who's in the seat. And what's really interesting is that it doesn't matter who that is, they are going to inherit a $1 trillion technology sector. That's the third largest on the planet, right? And part of that, a major part of that, is fintech. So companies like Zilch are really going to be very critical to the growth of the economy moving forward. And we really need to see whoever is in the seat leaning into businesses like Zilch and their peers, making sure they can continue to grow and thrive here in the UK, and ensuring ultimately that we see that economic growth that's going to drive the country forward. And certainly we're excited about the fact that conversations with both parties are certainly going that direction. Everyone seems pro-business. People are certainly very supportive of Unicorn Council and the types of policy that we're calling for. And that's the last thing I will say on this is we are certainly calling for clarity on policy. That is what's going to drive this.
Well, I hope we're going to get some in the coming days and weeks with the manifestos dropping. I hear that the Labour leader, Keir Starmer, has been having breakfast with every CEO in the city. Has Labour rolled out the red carpet for you?
Absolutely. I mean, I keep saying this, we are seeing this on both sides. So both parties are really leaning in. And across the spectrum, we're having numerous conversations that are very productive around policy, how we drive things forward. And with the Unicorn Council, which we co-founded with Innovate Finance, as you mentioned, we now have 50 billion of market cap companies in that council. If you think of it this way, that could be 50 billion of listings coming to the LSE. That would be FTSE 100 companies. And so when we talk about policy, we've refined the list of all of these companies' asks to about 5 major points so that we can communicate this succinctly to Downing Street and policymakers. And those are across things like, for instance, entrepreneurs relief, EMI, VAT, R&D, and stamp duty. And the whole idea here is, let's remove any excuse for the stakeholders here in the UK to invest in the economic growth of the country. Let's just get rid of those excuses. And what I mean by that is, if you think about things like pension funds, are they buying and holding British stocks? Just 30 years ago, almost 50% of pension money was in British companies. Today, it's less than 5%. How do we change that? And at the same time, how do we get retail investors to buy and hold British stocks? I'm sure you know this today. You can buy and hold a Tesla share as a retail investor for free. But a Rolls-Royce share is going to cost you stamp duty. Why is that the case?
OK, well, the polls suggest that Labour are going to be the next government. You say you've spoken to both the parties, but you can tell me whether they're coming through on these demands by answering my next question. Are you going to do your IPO in London over New York?
Well, that's a great question. Our shareholders would love to talk to you about that too.
Break some news for us.
Exactly. I mean, look, we've always said, and you mentioned this earlier, we're a big advocate for companies building the business here, growing here, staying here, listing here. And we'd certainly love to see that happen. There are certain things that need to be done, and we're in conversation with the LSE. Again, the LSE is leaning in to all of these companies and saying, tell us, what do you need to see? Of course, we need to see liquidity. We need to see policies to help drive that liquidity. We need to see interest rates starting to come down so we can drive capital back to equities. They need to start working a bit harder for the yield. And that'll open markets back up. And if we can then get policy in place to have pension funds buying and holding British stocks at scale, we can get retail investors buying and holding British stocks, you start to get an environment where we've removed all excuses for companies not to list here. So, that's the way we're thinking about it. if we can get these things right, I'm not sure why companies wouldn't consider very strongly listing here.
Well, the pension fund's point is a controversial one. Do you think that it should be mandatory that they should hold a certain amount of British assets?
I'm not sure it's easy to make it mandatory. The UK naturally is a very international scene when it comes to investment. If you look at the US, a lot of the money is domestic capital. So I don't think we want to kill that culture here. We want international capital here in the UK. And mandating a portion of this from pension funds may somewhat stifle that. What we need is policy that creates the right behavior from pension funds. How are they being measured? Is it on the cost of investment? Or is it on the return of their investments they're making? And if we tweak this, we might see that the behavior changes to chase down yield, real yield, rather than just the cost of making those investments and being very protective. So I think mandating a portion is quite difficult, but there are policies that could be put in place to drive this agenda.
Yeah, but of course that's not the only policy that affects you. It's also the regulation of the buy now, pay later industry. What do you want to see there from the next government?
We've said this numerous times today. Zilch is one of the only providers in the space that is fully regulated as we stand here. And, we've proven time and time again that it is possible to run a business like this at a 50+% gross profit margin being fully regulated. This is possible. So we would be calling on whoever is in the seat in 5 weeks' time, regulate BNPL within the first 100 days. Let's just get this right. We need to protect consumers. We need to remove the confusion and continue driving customers to this phenomenal way of paying over time and not being rolled into high interest rate credit cards.
And you've kind of benefited from the cost of living crisis, people wanting buy now, pay later products because they've been squeezed financially. As the inflation pressures ease off, does that become an issue for you?
Not necessarily. I mean, what we are seeing in the market is the cost of living is tough for everybody. Obviously, that does drive demand. But interestingly, customer behavior, isn't always how it would seem in theory. People actually tighten up their belts. They stop spending as much. What we are seeing is customers are spending the same, if not slightly more, but they're buying less items for that same amount. So naturally, you're seeing inflation come through in the numbers, and people are struggling to start to afford the day-to-day items that they need to buy. So whilst you could argue it's been somewhat of a tailwind, we also have to be very conscious of, are we over-lending? Are we lending responsibly? Can people actually afford this? So it's a very fine balance. We are very aligned with our customers. And this is why we provide both a debit and credit proposition. What we are saying is, don't use more credit. Come to Zilch and get deals, discounts, deep discounts, and use debit for the day-to-day spending. And where you need a bit more time, use the credit proposition, but never pay any interest. So the combination of these things really helps the customer.
OK, it's interesting that the spending patterns are changing, but as you say, demand for Zilch keeping on. All right, Zilch CEO and co-founder Philip Belamant, lovely to have you in the studio with me. Kind of an economic barometer, somewhat, your data.